Hello, everyone, and welcome to OC Live, a weekly broadcast on blockchain, branded tokens, and token economies. We feature weekly guests to discuss the latest in blockchain and the current projects that they are working on. And with us today, we have two guests. We're having two different companies, but one dialogue on one topic, and that is security tokens and security token protocols. And with us today, I have Timo Lehes. He is the co-founder of Swarm Fund, and we also have Howard. He is the CEO of StartEngine. Guys, thank you so much for joining us on OC Live.
Yeah, great to be here. Thanks for inviting.
Yeah, I'm happy to be here. Thanks.
So let's start off with some brief introductions. We'll start off with you, Howard. You've previously been a co-founder at Activision. You've been involved with several gaming startups. And then most recently, you've been at StartEngine for 6 or 7 years now, helping entrepreneurs, launch their startups. So can you tell us about your entrepreneur journey, your experience, and most recently your interest in funding for these startups and entrepreneurs?
Yeah, I've been an entrepreneur for 35 years. That's all I've done in my career. And so for me, being an entrepreneur, I was always interested in helping other entrepreneurs. I got very lucky to be the co-founder of a company that became a Fortune 500 company, the largest video game company in the world. And after that, I actually built a second game company called Acclaim that was an online game company, taking advantage of the multiplayer movement, especially the free-to-play movement. And that led to a sale. And after I sold the company Acclaim, I didn't know really what I wanted to do. And so I decided to build StartEngine as an accelerator. I made 59 investments over a period of a couple of years, 2 or 3 years, and realized the problem I was facing is that these entrepreneurs could not raise capital. They were having a lot of difficulties with it. And I didn't necessarily realize that the way financing and funding was working was a pretty biased system. It did not allow everyone to participate. And I decided we got to change it. We got to change how money is raised for companies. At that same time, a thing called the Jobs Act came out in 2012, which was a new law that permitted the ordinary investor to invest in startups. And I thought to myself, this is going to be a revolution. I want to take advantage of it. So I built StartEngine as an equity crowdfunding platform and started financing companies. So in 2016, when we launched, we did 10 deals. 2017, we did about 80. And last year, we did about 350. However, that said, there was a problem. The problem was a lot of investors were interested in investing, but they were not always comfortable to put in their banking system. So we introduced a credit card, which helped a lot for investors to invest. And then suddenly came the whole ICO movement. And we looked at it very interesting because it dwarfed. It was so much bigger than the equity crowdfunding business. It was billions of dollars. I mean, in 2017, it looked like about 6 billion was raised. In 2018, another 4 or 5 billion. It was just insane. And so we saw that as an opportunity to expand equity crowdfunding into a more global movement. And so we basically decided to approach the marketplace using what we call security tokens as opposed to just the utility tokens. And that's where we, as StartEngine, started getting involved in the blockchain.
Great, and we'll definitely jump into a little bit of the Jobs Act and what the ICO introduced into fundraising. But Timo, let's get into your background. Can you tell us a little bit about yourself?
Yeah, so I guess in some ways similar start to Howard in the sense that I was a software entrepreneur early on and built a couple of companies in the analytics and payment space. And after that, I actually transitioned quite early into the venture capital domain. So I was at a fund in Sweden early on, kind of working with restructuring their portfolio. And then, having been at that fund, I then transitioned into private equity. So I gradually moved more and more into finance and, financial services from having been an entrepreneur. So So I spent you know, a good 6-7 years within the private equity domain, and as a basically part of moving to California, which I did six years ago. Then I was at a fund in Sweden running a kind of a was 24 company portfolio at the time, seed stage fund, and we moved five of those companies to San Francisco for them to be able to scale and, you know, kind of get into a better ecosystem for growth. And so as part of that whole initiative, I moved across to San Francisco as well, and then started working with those companies. And you know, like Howard says, there's a lot of challenges around how to raise capital and how to, you know, basically get access to a wide variety of investors, because not all companies fit into the same category, into like a typical kind of Sand Hill Road type journey. But some companies have specific needs or specific maybe strategic investors that they would benefit from, and other companies would have other needs. So I kind of looked at that, and then at the same time I started doing personal investing. This is in around 2013, 14, building my own kind of small portfolio in the Bay Area. And so one of those companies that I invested in was a company called Banker Bay, and it's basically a deal origination platform or network for private equity, mid-market private equity. So we looked at that market and said, this is a highly fragmented market, and kind of it's very difficult to do like cross-border origination and placement of capital into various types of PE deals, except for the very large deals, which, you know, would always be on some of the bigger funds' radar. So we built out that platform. I was kind of an operational investor, if you will, and board member early on when we built that company. And so today that's sourcing about 700-800 deals per month. The deal value is about $25 to $30 billion per month. And so it's kind of grown into becoming this very large network of deal origination and private equity deals on a global basis. So it covers 160 countries. So from that, like, I was kind of in the middle of that project when Philip approached me about Swarm. And so then he was like, well, and we had already discussed how to use blockchain within Banker Bay, and we had like a number of different ideas around how to use the technology as part of that journey. But then eventually, when I looked at what Philip and I kind of came up with in terms of providing access and liquidity to private equity deals through using blockchain, and that then later became Swarm, I just found that that was like the next level play in this space. So that's kind of why I decided to co-found, you know, Swarm together with Philip.
Great. So both of you have somewhat of a similar background of bringing funds into these startups, into these companies that are raising money. And before we jump into the specifics of Swarm and StartEngine, Howard, maybe can you tell us a little bit about the history of fundraising? So you mentioned the Jobs Act, and that's something I wanted to go back to. So before the Jobs Act, what were the options for startups, and then what did the Jobs Act introduce?
So let's go back to 1929, where there was a big market crash in the United States that created a worldwide the Great Depression. And what happened at that time is people were able to sell stock in companies without any supervision by any government body. So if you wanted to buy stock in a railroad, no problem, you can invest, but then you would find out that you paid $10 a share and the company just issued more shares unbeknown to you at a different price, and it just started creating a dilution that would make your shares worthless. So the government decided to create the Securities Exchange Commission in 1932, and then they created the Act of 1933 and the Act of 1934. And these basically said, look, if you want to sell stock to the general public, you can, but you have to register with the Securities Exchange Commission, with the commission. You register those shares, which means they look at your deal and they qualify it. And if you get qualified, you can, you know, sell to the general public and then go on these exchanges like New York Stock Exchange, and later on, they created the NASDAQ. So if you think about that, the idea that you sell to consumers ended in that time. In 1933, it was over. So what did consumers have as an option? They had to just buy public stocks. Okay. So who could buy private stocks? It was basically created this notion of the accredited investor. These are investors who are wealthy. They have over $1 million out of their home. They make at least $250,000 in salary, and it's basically 5% of the population. That means that 95% are cut out from any opportunity that is, you know, a startup. like if your neighbor starts Uber, you're not allowed to invest unless you are an accredited investor. It's pretty harsh. So now we're going to another big event, the 2017, 2018, 2007, 2008, the Great Recession, not depression, recession. At this point, what happened was the economy tanked. A lot of the financial institutions went out of business or lost most of their value. They had to be bailed out by the government. And small business were having trouble raising money. So what they decided to do was to create a new form of fundraising. And they looked at things like Kickstarter, which is crowdfunding, backing, giving money away, donations. Said, wow, this is an interesting way. You could use the internet to raise money. So they created a new law called the Jobs Act, which is bipartisan. It was signed by Obama in April 2012, voted by everybody pretty much. And it said, look, we're going to change the rules for the SEC. What we're going to do is allow, first, a company can raise up to $1 million just by filing a notice to the SEC. That's called regulation crowdfunding. Then they said, we're going to allow you to raise 50 million, 50, right, directly from the general public, but you have to get qualified, similar to a public offering, but very light, mini, not as expensive. As you may know today, if you want to go public, you better have a very large valuation of your company, billions of dollars, and raise hundreds of millions of dollars, and you get picked, if you're lucky, by Goldman Sachs, Morgan Stanley to take you public. But in reality, Intel went public with $10 million. When they raised $10 million when they went public in the late 70s. So think about that. The market has completely changed, even adjusted for inflation. You went from, hey, I can take companies public when they're still early. Now I'm going to take companies public when it's very, very late. That means that the investor, most of the value creation has already happened. So now with the Jobs Act, you can participate. You can have these ordinary investors participate early, as early as it needs to be. And that, to me, is the revolution.
So Howard, with regulation crowdfunding, is that a private security sale to retail investors?
Yeah, that's correct. It's a private security sale. None of those companies are considered, the shares are not registered with the commission, which is what is required when you go public. So the shares are not registered. However, those shares have a superpower, which says, based on the rules, they can be freely traded after they issued under Regulation A+, and 1 year later under Regulation Crowdfunding. Even though those shares are not registered, they could be traded.
Great, and now let's move on to where we were not too far ago, 2017, and that's the ICO craze. That's something that introduced the ability to invest for any retail investor, and it sort of opened up many opportunities. I know, Howard, you're big on democratization, and sort of 1 year later we saw a crackdown on that, which was regulation on ICOs, which was getting away to sort of weed out sort of the scammy ICOs that were happening, or sort of the falsifying stuff that was happening, and to provide some retail investor protection. So I guess, Timo, can you tell us about where we are today with the security token offering? What is it, and what's the state that we're in today?
Yeah, I think, one of the realizations now, let's say in the aftermath of 2017, is that a lot of the ICOs were effectively securities offerings and should have been treated as such. So that's one clear thing. And I think, the way that the SEC has approached it is very much a kind of a start with the low-hanging fruit and the obvious kind of fraudulent cases, and then go after those and make sure that they get shut down. But then they also did something interesting, which was with the DAO ruling, where they basically were indicating that if anybody tries to run a fund specifically as a kind of a community-driven initiatives with profit participation from the token buyers, then that's also a security. So I think, during 2018, we had some pretty good indications of, where the SEC was heading with this. And I think, and Howard has been a big proponent of this, basically to say, you just need to kind of figure out your regulatory status before you make any offering, and then, And Howard built the platform to kind of do that for any kind of issuer, whether it was just a startup or whether it was an ICO. So I think that's like we've almost seen like the convergence now of these wild ICOs that were done early on with like very little or no product, even just based on a white paper, which are, you know, from a regulatory standpoint pretty problematic. And then subsequently, we've also seen, you know, not rulings, but at least comments about whether Ethereum would have been classified as a security or not. And then, you know, if there's sufficient decentralization and there's no, you know, central party governing an organization, then, you know, it's a possibility that actually some of those coins would be utilities and not securities. But the bar for that qualification is relatively high. And so I think that's where when we observed the market, that was kind of what we saw, that some of the early projects with like that were very decentralized, they were probably gonna just come out and stay as utilities, whereas the majority of the issuances that were done, certainly in 2018 and 2017, were in fact securities. And so when we look at the market and the way that we kind of approach the market, it's very much on the different end, at a different end of the spectrum. So when we started, when we launched Swarm about 13, 14 months ago, we were focusing on assets that were clearly securities. So if you have, let's say, you know, a fractional ownership in a private equity fund or a hedge fund, to us that was like, it's obvious that that's a security. So that's why we started from day one building based on a framework of how do you offer securities to buyers in multiple jurisdictions. So that was kind of the initial challenge that we went after. And we didn't focus at all on any of the kind of ICO becoming STO stuff, which was not our target market. So we actually ignored that initially, and we just went for like funds with track record, and we wanted to work with projects that had like more, let's say, assets that were easier to value and that would be, you know, be able to produce an audit report for their net asset value and things like that. So that's where we started focusing on this in the security token space. Whereas, you know, maybe, and correct me if I'm wrong, Howard, I understand that you guys were basically supporting a lot of kind of the earlier projects in terms of making sure that they were coming to market in a regulatory compliant fashion. Is that fair to say?
Well, absolutely. Our view was that all those utility tokens were securities. And as such, good news is if you use regulation crowdfunding or regulation A, you can sell to anyone. That's great. And if you use regulation D, 506C, you can only sell to accredited investors, which is not what the ICO market was about. The ICO was all about retail investors around the world. Unfortunately, the way security laws work is that it's not the country where your company's at. So if you're a US company or a Grand Cayman company, that's not where the jurisdiction for investors is. It's where they live. So if an investor lives in France, that's where the laws apply. And it turns out the laws in every country are different. And that's the biggest issue. And ICOs were just bypassing that entire thing.
Good. And both of you saw that early on. You can tell right away this is a security. It's better to go the safe way because, you know, the SEC is going to get to it eventually, and it's better to be compliant. Just lost my train of thought. Oh yeah. So going back to accredited investor, Howard, and you mentioned that that's not what the ICO market was going towards. Can you tell us what accredited investor means? Is that I think $1 million in assets and over $200,000 in income?
So in the United States, the definition for accredited investor is pretty clear. So it says, look, you can have $1 million of assets outside of your home. So if you own a home, that doesn't count as part of your assets. Those are assets. If you have debt, you have to count your debt, by the way. So that's number one. Number two is the second test is you have a salary that is over $200,000 a year, and if you are married, $300,000 a year as a couple. That test is simple, right? Except that a lot of these wealthy investors don't like providing that information when they go online. So if you go online today for an offering that's a Reg D 506C, which is for accredited investors, they're going to ask you to get a lawyer, an accountant, or a banker to certify that you're accredited, or you have to provide your tax returns, or you have to provide a bank statement. And I have to tell you, frankly, not everybody's excited about that. The nice thing about Regulation A is you can sell to unaccredited and accredited, and you don't have to go through that test. You have to just self-certify what you are. That's a lot more friendlier for investors. So if you think about today, an accredited investor, there are not that many. Most of them are older people because they're more towards the end of their career. They're not going to take big risks on crypto and startups. They're pretty much going to want a little bit what Timo was saying, asset-backed investments. And I get that. That makes a lot of sense. So the future really of crowdfunding can't be accredited investors. That it's just too restricted.
Definitely, and I think we saw a trend in 2018 with when we saw the SEC giving subpoenas to these ICOs. We saw a shift of ICOs trying to only sell to accredited investors and not to sell to any U.S. retail investors, but try to go offshore to other countries. And before we get into security token requirements by the SEC and the security token protocols, Timo, why don't you tell us about Swarm and where you guys stand in the industry?
Yeah, so we started by this position of tokenized, providing access and liquidity for basically fund managers within private equity and hedge funds. That's kind of the segment that we picked out, and there was very particular reasons for that. And we wanted to have something an asset class that had credibility and that was easy to audit and to verify the underlying asset, or somebody coined the term "know your asset," so it was like easy to understand what the token was representing. So that's where we started in the market, and then we kind of worked through a number of different projects across categories such as real estate and tech companies, and more crypto related things such as fractionalized master nodes and things like that. And we also had one successful fund manager that was offering an art token that was basically a fractional ownership into a portfolio of art that they were managing as an investment. And so, we went through that first year in 2018 of kind of learning about what's the dynamic between the issuer and various types of assets across all these different asset classes, and then what is actually happening on the investor side of that equation. And of course, most of the people on Swarm at the time, they were crypto people, so they actually turned out they didn't care that much about real estate and some of the other boring asset classes. So we just realized that, okay, so regardless of what we do, the sponsor or the whoever the fund manager is, which is then the token issuer, they would really have to have a good grasp on who their target audience in terms of investors are, and then also have a plan to how to reach out to those investors and obviously raise money from them. So it just became very evident that our function in this whole model was really just to make sure that whatever they were doing was being done in a compliant manner. So in January this year, we launched basically a protocol which is blockchain independent. So it's called the Market Access Protocol. And then the initial implementation that we did was based on Stellar and a code fork from the Stellar blockchain. And so the evolution of that now was another takeaway from 2018 was that 95% of these tokens on the security token side were issued on Ethereum. So we saw that demand, and obviously for obvious reasons, because a lot of the infrastructure is there, and we thought that there was a way to actually control Ethereum contracts to make sure that they are compliant, so they don't have the incidents like Blockchain Capital had early on with tokens floating around out there outside of their control. So as of January, we just decided to support both Ethereum-based security tokens, Stellar-based security tokens, and pretty much every blockchain of any significance has come to us to discuss how do we implement security tokens on our chain. So that's I don't even want to go through the list, but I think who they are. They're all the top 15 on CoinMarketCap basically. So.
Great. So what are some of the ways that you provide liquidity to these fund managers? Is Swarm an SEC compliant security token exchange?
No, we don't provide liquidity. So we just provide infrastructure for compliance. So, when they create, and I think the cool thing that we launched in January was just to say, a lot of the issuance platforms out there are kind of integrating technology with issuance as a process and the legal framework and everything into one bundle. But we thought that was, although that's kind of what most issuers need, we thought that was an unnecessary way to build the commercial model. So we decided to provide the issuance, the technology required for a compliant issuance. We decided to provide that for free. So basically, it allows anyone to create a Ethereum-based security token, and it's based on a staking model of Swarm tokens. But I mean, the key point being that, if anyone can basically know that by creating a smart contract representing an asset in a particular way through our platform, then they would know that it has all the built-in transfer restrictions, and it has the ability to qualify buyers and sellers in a cross-border environment. So it's not only like a Reg D kind of Reg S, Reg A, and like a US based thing. It's actually based on our early experiences of what the community looked like. We had, basically users from 60 countries. So we knew that we would have to build something that was cross-border compliant from day one.
Great. So with that Ethereum security token, compliant security token, is that where SRC20 comes from?
Yeah, well, it started out as a Stellar implement. It was actually a Stellar implementation initially, and still, the first implementation that we did was on the Stellar code base that we used for our initial launch. But now when we're doing the blockchain independent implementation, it really is quite similar to a DS protocol or an R token or an EIP-1450, in the sense that everybody has agreed that these token contracts need to, talk to some other entity that's going to provide them with some critical part of information that will tell them whether this transaction is allowed or not. And you can implement that in a couple of different ways. And I think, we can talk about what our approach was. But so today, SRC20 is really a contract implementation, which basically says that this token contract talks to an oracle to figure out whether it's allowed to do certain things or not.
Great, and that I think. Thank you for defining sort of the SRC20. And now we'll go to how StartEngine is working on. They launched an EIP, EIP-1450 for creating ERC-1450, which is an extension to ERC-20, except it's a SEC compliance security token. Can you tell us a little bit about EIP-1450?
Sure. So we were looking for a solution that allow to tokenize securities that would fit every single rule that the SEC has put in place. And you're talking about rules starting from 1933, going up to the Act of 1940, which were for funds, then going to the Patriot Act, which was and the Bank Secrecy Act, and the Jobs Act. I mean, you keep going, right? It's a number of legislations and rules. And the document, if you look at the SEC, it's a pretty voluminous amount of rules. And to remember all those rules and understand how they work is not easy. So we decided, okay, well, let's take that challenge and build a smart contract on Ethereum that actually meets every single regulation. So how do you do that? It's not easy. So what we came up with in ERC-20 is we took ERC-20, which was a well-known standard for issuing tokens. So if you have a Trezor wallet, it works. If you have a digital wallet on your phone, it works. All these things are ERC-20. And so ERC-1450 is the same thing, except that someone who has a token, it's a security, first of all. And the real security, if you say, where is the ownership? Where is the asset? The asset, turns out, is not on-chain. The asset is off-chain. The chain represents the asset, but it's not the asset itself. So if you lose your token on ERC-1450, we reissue it. That is a big idea, an idea that has not really been adopted yet. But the concept that because you lose your password, you lose your asset, it doesn't make any sense when you're talking about real assets. So for example, you own a home, and now you don't own a home anymore because you lost your password. That looks like the secret Swiss bank accounts during World War II, where people, died in the Holocaust. The next thing you know, they forgot to tell their kids that they had a bank account with a private code. And it turns out, yes, that money was frozen for 70 years. We can't do that. That's not going to build an economy. So what we need to do is allow reissue minting, that's called minting, of those assets. And so we do that in ERC-1450. The other thing is, because ERC-1450 meets every single regulation that's out there from the SEC, that means that it needed to be controlled by a broker-dealer. It turns out, when you talked about securities in the United States, the broker-dealer has a very important function when you want to trade securities. You need a broker-dealer to trade securities. You could trade securities with your neighbor, that's fine. You just go to your neighbor and sell your securities if you don't have limitations on your transfer. But if you have limitations, you won't be able to do it, right? So a broker-dealer is the person who's the arbitrator. It does multiple things. It knows who you are. It checks that you're not on the OFAC treasury list, which says that you're a bad actor. It checks a lot of different things, that you actually own the assets. Where are the assets? Well, they're sometimes represented in a transfer agent, which is a registered entity with the SEC as well. We own one of those. And so we've decided that the tokens really is a representation. It's great for transparency. You get to see who owns what on an anonymous level, and you get to see every transaction. But yet, the asset is not there. The asset is going to be in the certificate of incorporation of the company. It's going to be represented and tracked by a transfer agent, and the broker-dealer is the arbitrator for doing the trading.
And yeah, definitely. I think it was an exchange in Canada, Quadriga, that the owner died, and he had the sole access password to access the crypto, and that's something that's solved for if you lose your password in the EIP-1450. So Howard, can you tell us a little bit more about the RTA, the registered transfer agents, in StartEngine, the role of StartEngine? Is StartEngine a broker-dealer?
Okay, so this is really important. In the United States, there's a rule called 12G. Very complicated, but basically, I'll simplify it. If you're a company and you're selling shares, you're issuing shares, you're selling it to investors, if you go over 2,000 investors or 500 non-accredited investors, you need to register as a public reporting company. That means you're really going public. That's what happened to Facebook, by the way. They were forced to go public because of that rule. So if you think about it, that is pretty stiff. Oh my God, 2,000 shareholders. Now, if you want liquidity for anything, if you have 300-400 people who own shares in a company, that's not liquidity. There's no liquidity there. You need 5,000. That's liquidity. You need 10,000. But if you go over 2,000, that's a problem, right? And if you have 501 unaccredited investors, you have to go public. That's not realistic. Then companies who go public have to do Sarbanes-Oxley, they have to do Dodd-Frank. I mean, you just keep going. It's $2 million to $2 million a year of fees. No one's going to want to do that. There's an exemption to 12G, superpower. That's if you use a registered transfer agent, and you've issued the shares using Regulation A or Regulation Crowdfunding, you're exempt from that 2,000 shareholder rule. Exempt. That is a great story. That means that it is possible for companies to do a security token offering with 5,000 people, and yet they don't trip the rule. As long as they use Regulation A, Regulation Crowdfunding, and they use a registered transfer agent, it works. And that is something the market does not understand today. We're writing about it. I published my own blog. People can read it. But however, it's still something that is not understood.
Definitely. And I think one thing that mentioned about EIP-1450 is that it's sort of one compromise is that it takes away decentralization. And attached to that is sort of the RTA in the process. So who is, I guess this question goes to both Timo and Howard, So who are security tokens for? Can anybody buy a security token? And what happens after they're purchased? Where can they be transferred, and where can they not be transferred?
Well, there's not a single answer to that, right? I mean, this is the thing. There's the geographic aspect, and then there's also the, let's say, the time or regulatory maturity aspect. You know, what Howard was talking about is super interesting. Once you have Reg CF issuances for security tokens, and there are a couple, I believe Republic have done a couple of them. Maybe you have done them as well, Howard. And then what we're waiting for really is a Reg A plus, like a proper Reg A plus with thousands of buyers and you know, a significant amount of capital raised. That's what we want to see, and we still haven't seen that, as far as I'm aware, at this point in time. So once we have seen I think the Reg A plus is the game changer for the US market, in my view. Whereas, you know, internationally, the dynamic is quite different. And I think the type of buyers that we're looking at, like internationally, for many of the things, including our token and more sophisticated investment products, are actually not retail. So it's almost like, we look at the market, it's almost like it's polarizing into two different camps, where you have, you know, the kind of the retail, the high volume, kind of high investor volume market that Howard is talking about, with like liquidity, like rich liquidity, thousands and thousands of buyers and people trading these securities. And then on the other hand, we have the category where we started, which was more on the kind of the side of the high net worth individual, family office, a little bit more sophisticated investor, where there's actually not the same kind of liquidity profile at all. That we don't expect that market to develop to like, you know, into thousands of people buying and selling, let's say, you know, a piece of an arts portfolio, because it's so niche and it has, you know, a lot of information associated with it that you need to go in and kind of investigate before you would buy that security. And so we're focused a lot on like how to provide information and link information about the underlying asset into the security token contract, so that people can basically be sure that the information is being provided from the, you know, from the source or from the issuer. So we've actually looked at a couple of ways of implementing this in a decentralized fashion, but that still meets the requirements of both having, you know, transfer agent type roles in the MAP network, and then also, you know, being able to attach broker dealers to that. And I think on the broker dealer side, it just depends on if you're talking about like secondary trading, or if you're talking about, you know, basically fee-based capital raises. But for secondary trading, yeah, you need a BD and an ATS license in the US, and you know, T0 seems to have one. And I'm sure Howard and you guys are. I think that'll be interesting to hear a little bit about where you are in that process as well. So.
Yeah, so in our process is we're at the end of the road on our broker-dealer registration process, and it is not easy, by the way. It takes a long time. It's been over a year. And as soon as we get that, we're going to be launching our own trading marketplace that is a broker-dealer, and it's called an ATS, an alternative trading system. Once we have our registration, we've built technology for that, and it's going to be a great thing. Liquidity for the shares we issue for our companies. So if a company has raised, you know, $5 million with 3,000 investors, like we did for our own shares, for StartEngine shares, the investors will be able to trade. And we believe that liquidity, when you have 5,000 investors, is possible. You're able to get enough of a bid and an ask so that there's some reality to the trade, and it can enhance the value of the asset because of liquidity. As everybody knows, lack of liquidity can depress the value of an asset. So we're pretty excited about already the origination platform, so you can issue the shares. We have ERC-1450, so you can track those tokens that were issued, and you can see what's going on. And I agree, it is not decentralized. That is correct. But the truth is, if an asset exists outside of the blockchain, that's already not decentralized. That already loses its decentralization aspect to it. And then we have the broker-dealer, the trading, all of this in one solution for our customers. And we're pretty excited about it, except it takes a long time, and we understand why. Regulators are cautious, and we get it.
Great. And going back to Timo for a second, Swarm is more global. You guys just recently opened up an office in Berlin. Can you provide a little bit of a global insight on security tokens? Does the definition of a security token change outside of the US?
Yeah, I mean, the security definition, I think, as an underlying kind of mechanism is fairly streamlined, but the regulatory frameworks around securities are very different depending on where you go. And so one of the key aspects of why we're, what I see as the benefit of having, Philip, my co-founder, in Berlin, and then we have, an office there and a bunch of activities out of Switzerland and Liechtenstein, is because we'll be able to move faster on some of the aspects of our project. So, for example, coming back to Howard's comments as well as our conversations with basically every broker-dealer ATS in the US, it's even once they have the approved license for both the BD and the ATS activity, it's still, you still requires obviously the private restricted securities timeline to be passed, which is this 12-month window from issuance that, where you basically have a locked security that you can't trade. You can sell it abroad, but then it can't trombone back into the US. So those are the kind of things that we keep track of. But we just see that the US is it's one of these markets where it's obviously massive and it's going to be very large end of the day. But at this point in time, because of the lead times for the ATS license approvals, as well as the private restricted security timelines, it's actually going to be a lot slower than some of the other jurisdictions, such as, for example, Switzerland and some other places that we're working in now. So I think that's the big difference for us in being on both continents.
Great. And going back to who are security tokens for, on the startup side, I'll go to Howard. There's a variety of different ways that startups can raise money. Obviously, IPOs are now only for these companies that are opening up with billion-dollar IPOs. But these startups have sort of different options. Maybe if it's an SMB, they have microloans, 8 guaranteed loans. So who are security tokens for, from the startup side? In terms of what they're raising, when should they consider a security token offering?
Well, you're absolutely right. Startups have options. Companies led by entrepreneurs have options when they raise capital. Actually, I'm writing an article about this that I'm going to be publishing soon. So you can go as simple as friends and family. That's the first start, or use your own money. But that's not available to everybody. So then you go up the food chain. You get angel investors. These are wealthy people that you have to know, and you have to pitch to them. Then you can keep going up the food chain. But they only do 2,000 deals a year, and there's 600,000 new companies are created in the. What is going on? So then you have the loans, the small business loans. Those are great. They're hard to get. When you get them, they're great, except that it's debt. It's not equity, so you're carrying debt on your books. And you can also go for loans through banks, but they're going to want assets like collateral, such as your home. That's not so great if the business ends up failing. It's harsh on you personally. So these are the options. So we decided, you know what? Why not create another option? Equity crowdfunding. What is that option? Well, it's mostly equity, so you have less of the risk, and it's spread among thousands of people. So if someone loses $1,000, that's not so good, but it's not a disaster because they're able to, recover from that $1,000 loss. So our view is equity crowdfunding is the future of finance. Why? Because most of the companies are not able to get financing through those channels that I mentioned to you. Yes, debt is always available, but again, people have to understand that debt is great if you're cash flow positive, if you have, real income, and you put debt to buy equipment, which will make you more money. That makes a lot of sense. But if you're raising debt to finance a growth company that needs people investment, that has risks, that is the bad instrument. That is a kiss of death. So we understand that there are options out there. We just want to educate the entrepreneur to understand that equity is probably the right thing for a startup.
Great, definitely looking forward to that article that you're working on. And I guess we'll end the podcast today with what's next for you guys. So I guess we'll go with you again, Howard. What's next for StartEngine? What are some things that you're sort of waiting on, and what's next to make EIP 1450 to be processed into an ERC?
So our next step is very clear. We need our broker-dealer registration. We need to launch our trading platform. We need to start issuing, every time we issue shares, there's a token associated with the share in ERC-1450, and build a community around it and allow them to have liquidity. With Regulation A, there's no time lock. You can trade the next day. With Regulation Crowdfunding, there's a 1 year. With Regulation D 560, there's a 1 year. So we believe that once the SEC understands how important Regulation A is to the U.S. economy and allows companies to use that rule to raise capital, even by issuing tokens, we think it's going to be an enormous success. However, we have to be patient, and that's what we are doing right now.
Great. And Timo, what are some next steps from Swarm? What are you guys looking forward to in your new Berlin office or in 2019?
Yeah, we're looking predominantly at the liquidity problem, because like one of the things here that let's say we're actually more focused on tokenizing existing assets rather than capital formation. So what Howard has talked about is purely capital formation, i.e. raising capital for various startups and projects and so on. And I agree, Reg A Plus is the big game changer for the US. It really is. It's like I'm definitely waiting for that one to happen. Now, having said that, we're really more focused right now on tokenizing existing assets such as existing funds, and there's a bunch of family offices and other people that have existing illiquid assets that they want to take to market and get some liquidity for. And so therefore we're looking much more at like where can we do that and which jurisdictions are suitable to get liquidity in early on and without being, let's say, as restricted as an issuance would be in the US. So we're really looking at like a combination of secondaries, or whatever you want to call them, like in basically exchanges for security tokens, and which ones are the ones that have a readiness to actually start trading securities right now. And so there are T0 is live in the US, it's all great, but then we have the private restricted securities limitation. So we're looking more towards Europe and Asia to really kind of show that we have a direct path towards liquidity, because that's what most people want. Regardless if it's a primary issuance of a tokenization of an asset, or if it's somebody that bought a token, they always want to have the flexibility to be able to trade in and out of that token. So that's kind of where our head is at right now. And then just getting more high quality, issuers to work with us. That's the other thing.
Great, and definitely looking forward to these developments. For the listeners, thank you so much for watching this right now. I have the links down to Swarm and StartEngine down in the description below. Howard and Timo, are there any last announcements that you guys want to say? Any upcoming conferences that you guys are either hosting or attending?
Yeah, we're hosting our next summit, which is April 12th. The theme this time is not blockchain and cryptocurrency, even though we do talk about it. The theme is basically how to raise capital for your business. It's a crowdfunding summit. It's focused on primary issuance, not on secondary. And so we hope to invite hundreds of CEOs who are interested in raising capital. And it's going to be in Santa Monica. And to learn more about it, you go to startenginesummit.com.
Yeah, I would say that our main event right now is really a virtual and an online event, because after we launch the free security token issuance on Swarm, then we're really trying to gather as many people as possible into learning and understanding how we do that process on Swarm. So we just want to have as many people as possible to kind of go to Swarm and figure out if this is something that they could use, and then build on our tech to get their compliant security tokens out there. And then, of course, there are legal aspects and other regulatory things that you need to couple that with, that we can also provide from our for-profit company. But, you know, at the outset, we don't think that people should be paying an exuberant amount of money for just getting, you know, compliant security token contracts, because we provide them for free. So that's what I want to invite people to join in on that initiative.
Great, and those links are listed down in the description below. For those of you that are new to this podcast, we feature weekly guests that discuss the latest in blockchain or the current projects that they're working on. So be sure to hit that subscribe button. And if you're listening to this on the podcast version, you can watch the video series on YouTube. Howard and Timo, thank you so much for joining me on OSC Live.
All right, thank you.